Welcome to the Voice of Retail podcast. My name is Michael LeBlanc, and I am your host. This podcast is produced in conjunction with Retail Council of Canada. In a wide-ranging discussion, Sue Hutchison, President and GM for Equifax Canada, talks about cybercrime, the state of Canadians' credit ratings, and their forecast for the Canadian economy and consumer spending for 2023. Sue, welcome to the Voice of Retail podcast. How are you doing this afternoon?
Very well, Michael. How are you?
I'm fantastic. Looking forward to speaking with you. So, listen, where am I finding you today? Are you based in Toronto, or you are on the road? And I imagine you travel a lot. Where am I catching you today?
I am in Toronto, actually working out of my home office today.
All right, and that's your base. Do you spend a lot of time on the road? I think you were in down south, as in the U.S. last week.
Yeah, I do. We have quite a large team in Quebec and a number of customers there, so I spend quite a bit of time there. We have clients all across the country. We really partner with really all segments, including kind of government, large banks, medium banks, fintechs, commercial businesses. So. We've got a number of customers across the country. And then, of course, we're headquartered in Atlanta. So I spend some time down there as well.
All right. Well, listen, let's jump right in. Tell us a bit about yourself. What's your background and what you do for a living?
Yes. Well, my background is mostly in financial services. So started my career, spent a lot of time in banking, commercial and corporate banking and, payments technology, and spent some time at a large fintech and find myself here today. I've been in role nearly 2.5 years as president of Equifax Canada.
And where did you always want to be in financial services? Like, was that a calling for you, or did you sometimes retail is described as the accidental career. I'm not sure the finance world works in accidents, but tell me a little bit about that.
Yeah, I do have a Bachelor of Commerce and an MBA in finance, but I did not really want to work in banking. And I my very first career job, the company got bought, and I found myself out of a job after 7 months in the corporate world. And I was like, wow, is this what it's going to be like? And my boss at the time went to a bank, and he said, I think you'd be great here. And I was like, a bank? That sounds horribly boring. And there I was for, 15 or 20 years in banking at two global banks. So actually had a lot of fun because there's a lot of different jobs you can do. I started on the client side and then more in product management and technology and worked for global banks. So they were fairly small here in Canada. So I had kind of the opportunity to do, what were kind of startup entrepreneurial roles. So it was actually a lot of fun.
Yeah, and I imagine, as is often the case in Canada, when you work for large global companies, your remit is quite broad versus very narrow and deep, right? So, you run entire lines of business for the country versus, I oversee ledgers for the left-hand side of the room kind of depth that you kind of get into the U.S. and
it's actually it's a really good point. Yeah, the whole team is smaller, so you don't have such specialization. So I was lucky in that I got to do a lot of different jobs, and each of those, you're right, were quite broad versus some of my counterparts in the U.S. where the roles were, sliced quite thinly, I would say.
Well, listen, Equifax would be a very familiar name to the retail industry listeners, but tell us a little bit about Equifax other than, you told us a little bit about the scope, the national scope in the U.S., but who is Equifax and what do you do?
Yeah, so Equifax is known, historically as a credit bureau. So a credit bureau really provides scoring and data and insights on consumers and as well businesses. We're that's the history. It's I think over 120-year-old company. And in Canada, its roots are actually in Quebec, where it came to Montreal as the first international location. Today, Equifax is really a data insights and technology company. So while we still provide a lot of the original sort of scoring and information on credit history, we also, because we have so much data, we can also prove identification, and we do a lot of work in the authentication and ID space as well. Here in Canada, we're actually the largest consumer bureau, and we're the largest commercial bureau as well. and we've gone through quite a transformation to cloud technology. So I've been fortunate enough to be the leader of the business through a pretty exciting evolution of the business, and a real milestone in its history.
Let's start out with one of the most pressing issues, ripped from the headlines, so to speak, cybersecurity. You've had your own cybersecurity incident back in 2017, I remember, so you definitely speak from experience. And you're a leader in helping businesses spot and stop these hackers. But what's your best advice based on your experience and recent impacts regarding cyber threats? And in the case of a breach, best practices. What can you share?
Yeah, so you're right. We had in 2017 a cyber incident. It was actually initiated by the Chinese military. And so kind of 6 years later, we've invested about $1.6 billion in technology. And our avenue to success has been going to cloud technology, which is generally easier to secure. And we've learned a lot of lessons along the way, and really focused on being the best, not only in our industry, but in all industries. So for the last 2 years, our kind of rating, where you'd be rated on cyber maturity, we would be top of the pack, better than financial services overall, better than healthcare, better than even government. And that's a global rating. So we're super proud of that. And as I say, learned a lot of lessons along the way, and are very transparent in terms of really sharing our learnings and really best practices. So I think, a couple of things I think we would say is really establishing a security first culture. So making sure that it's really primary on people's minds. And I think for small business and retail, it's difficult because you may not have as sophisticated a team as you would in some of the larger companies, but
maybe you might not have $1.6 billion to put into it.
100%. You wouldn't have the investment or the people. Of
cloud
course,
must help though, right? I mean, my perception, somewhat observational, less educational, is that cloud computing kind of shifts at least a fair bit of the risk up into folks who host those clouds, whether it's Azure or Google or AWS. Like they take on a larger role, and of course, you would hope they'd be a lot more sophisticated. I mean, their resources are X times what any retailer would have. Is that a fair statement? Is that how you look at these things?
Yeah, that's actually a great observation, Michael. I think if you think about trying to secure your own premises, whether you're a restaurant or a hotel or a bank for that matter, you're running, legacy platform in your own kind of on-premise solutions. You're reliant on the sophistication of the technology, but also the team. If you think about cloud, and you're right, 3 big providers, they're going to be, highly, highly sophisticated and, kind of massive brand at risk when you think about all the data that they're taking care of. So it's a good way to look at it. Definitely.
Let's talk about governments. I have a wide listener base, so let's talk about what governments can help in this world of cyber crime. I mean, it feels like we need to follow the money. I mean, cyber currency, Bitcoin or whatever, these things have become the currency of cyber crime. Is there anything that, from your perspective, again, so much experience with it, I'm sure it comes up all the time. Is there anything that governments can be doing better or help get our arms around this?
Yeah, I mean, I think we have an organization called the Canadian Centre for Cybersecurity, and folks haven't seen it, have a look. They do, they protect the government assets, but they also do a lot of information sharing and best practices on their website. But you're right, the challenge is for kind of smaller firms in terms of having the understanding and sophistication, for sure. I think, Bitcoin, et cetera, listen, these are new model stable coins, central bank digital currencies that are challenging, the types of money we have. I think, until these alternative, let's call them payment systems, if you will, have the monetary stability in terms of holding value, having public trust, and the financial stability, that they're operational, they're not subject to outages. I think we have a long way to go before we see sort of true replacements of what we today consider kind of common public money.
Yeah, it's hard to follow the money, right? I think they found their niche, that is Bitcoin, cyber currencies, and crime and organized crime. But anyway, well,
yeah, 100%.
You know what I mean?
I think it's hard. So, financial crime is hard to follow in the traditional, if you will, sort of the right. Public-private system we have, which is the public being the central banks, the private being the commercial banks. It's hard to follow financial crime and money laundering, et cetera. These private networks, you're right, make it even harder. So I think we're in for some changes in terms of how those are regulated or not. I think until there's some sort of central authority, it'll be very difficult to have the transparency and the visibility we need. Yeah,
you'll probably still have that mix of organized crime and nation state actors, but at least you'll be able to have some way to follow the money. Speaking of government, a note that you folks sent me talked about supporting proposed legislation to help the victims of human trafficking from the negative impacts of coerced debt. Tell me about why you're involved in that and what your focus is and why you clearly have passion about it, and talk about it for a bit.
Yeah. So, our vision or mission really is to help people live their financial best. So people can be consumers or businesses. And an important issue where we had 4 of the political parties actually coming together to amend what is an existing bill to protect survivors of human trafficking. So when we heard that this was going to be proposed in the legislature, we said, this is something we need to support. So essentially, as I said, it's an amendment to a current bill, the Consumer Reporting and Prevention of or Remedies for Human Trafficking Act. And it's really to prohibit the inclusion of what they're calling coerced debt. So this is a concept where victims of human trafficking have been forced to take out credit in their name during their time of captivity. And often those are student loans, they're credit cards. And unfortunately, when these survivors, try to rebuild their life, not only have they had a kind of a very horrific incident in their time in their life, they then are faced with financial debts that they're really not responsible for. So what this bill does, it helps survivors really move on with their lives and really forgives the debt, which is in Canada about between $20,000 and $25,000. So it's fairly significant. So what the bill actually does is it prohibits credit bureaus from reporting on any debts that are considered coerced.
Oh, I see. Okay.
It prohibits the collection of these debts by sort of any collection agency, which could be a lender themselves, or sometimes these things are outsourced. And then it also prohibits any financial institution of taking these debts into consideration when they're thinking about potentially future lending. And then finally, it adds kind of a tribunal process. So if survivors aren't satisfied in terms of outcomes, there is a way that these concerns can be raised in sort of a tribunal. So we were just very, interested in supporting. Obviously, it's very important. We already have the concept of a fraudulent debt that is forgiven. And this was really just an important area that we wanted to support as well.
I guess it also indexes back to cybercrime, because really, I would imagine there are cases that you might know of or have heard of where someone who's under duress, is hired by an organization and winds up with some passwords and keys. So that becomes the inside job or whatever, right? So that can happen as well, I'd imagine, yeah.
Yeah, absolutely. Absolutely. So there is the concept of fraudulent debt where obviously with, a sufficient, validity, those would also be forgiven from a credit bureau perspective.
Okay. And just one last question about that. How hard is it to validate that, you put your hand up and you go, how do you get that debt that you have designated as, as fraudulent debt. Is that a complicated process? I mean, not everyone has the means to lawyers and things like that. Like, is that part of the process as well, making it easy for the common person, or even a new Canadian or someone who doesn't know the system to take advantage of this opportunity?
Well, new Canadians are probably protected because they don't have any credit history in Canada. Which is a problem actually we're trying to solve as well, with the use of alternative data. So we're looking at, some of the credit scoring in this country that, hasn't really been modernized to a great extent over the past couple of decades. So we're looking at how do we incorporate more relevant data like rental and, telco data, which today doesn't help you build a credit score. So if you, for example, pay $2,500 a month in rent for 10 years, or you pay $2,500 in a mortgage for 10 years, that mortgage helps you build your credit history and a credit score. Those rental payments do not, even though it is a, commitment to pay and shows capacity to pay and trustworthiness. So these are areas where, as the largest bureau in Canada, we feel a responsibility to make sure we're continuing to modernize the information which our lenders are using. And we actually are working with some of the big lenders in the country who are very interested in certainly supporting newcomers to Canada because, a big part of settling in, so to speak, is really joining the financial ecosystem.
Yeah, sure. I mean, that's what credit unions that were the origin of that was credit unions, right? Because communities would get together and bank with themselves, and still play a pretty important role in that. You guys are very active in acquisition as well. I hear you just purchased was it Profile Credit that broadens reach in the retail. Is there a retail specific connection to that? Can you talk about that?
Absolutely. We purchased Profile Credit or Credit Profile, depending if you're speaking English or French. They are based in Montreal, and it's part of the food industry. It's a food industry credit bureau. It's one of actually the largest industries in Canada, and in terms of number of businesses. So if you think small restaurants, corner stores, grocery, specialty stores, the agri-food business employs about just a little over 2 million people, and it's about 7% of Canada's GDP. So a really important part of the Canadian economy. And, we decided this would be a great company because they have really tremendous data. We do have a commercial bureau, meaning we have credit scores and information about businesses across this country, and this will really add information on about 1,000 companies, food service distributors, suppliers. So this is we're really excited, and it's sort of billions of dollars of trade information, and really the food industry is also going global, and so it's a really large source of commercial credit information, and really helpful for those companies to be part of our data as lenders really look to provide capital to some of these small and medium-sized businesses.
So I guess in the context of let's say a grocer who might be listening and they've got a new prospective vendor, this would be helpful in sorting out if they're stable and dependable from a financial perspective before they do a lot of listing work and all that. Is that that one thing that it could be used for?
Absolutely. Yeah, that would be something we would, we can provide analytics on how well, companies are paying, whether they're high risk accounts, whether they're, profitable, right down to we can predict bankruptcy based on some of the behavioral trends of the company. So absolutely, it's a great source of data.
Let's shift gears a little bit. So the economy goes up, down, and sideways, and retailers are telling me they're experiencing a little more risk in their consumer loan profiles, a little more fraudulent applications, kind of a different type of fraud, but also just a little bit of risk, right? And as we look forward and try to read the tea leaves, I think you guys would be pretty good readers of tea leaves when it comes to this kind of thing. So what's the forecast from your perspective and your position in the ecosystem for the Canadian economy and consumer spending for 2023? Any advice or insight for the retailers listening?
Yeah, I mean, I guess, starting with the good news, I think we've seen more businesses open in the last few quarters, than we have in the last few years. So a lot of optimistic in Canada and a lot of, newcomers to kind of the retail and commercial sector in Canada. That's the good news.
Yeah.
I think the more concerning news is obviously cost of goods are going up, and we see it certainly in food, grocery, some of the sectors. We're certainly seeing that. Cost of capital, of course, we're 4.25 basis in points up just in 2022. So that's really expensive and has a really dramatic impact on both the businesses, but also the consumers that run those businesses. I think still some supply chain issues, depending on the segment, are really persisting. Increased wages, although we're seeing a little bit of loosening of that in certain areas like technology jobs, but we're seeing full employment, right? So
isn't that a good thing though? Isn't that
absolutely
when it comes to increased wages of hourly workers? I mean, it doesn't feel like we're at the point where that is. I mean, it's not a huge contributor to inflation, right? A lot of our inflation is imported into the country with food price. And of course, when when the wages go up, people spend more money with retail and other sectors,
absolutely.
Right? There is a bit of equation there that kind of work, yeah?
Yeah, 100%. Of course, our interest rates are local here in Canada. You can debate whether they were imported or not, but that would be certainly an expense, both for pure capital, but also just for regular spending on, variable interest rate debt is a bit of an impact. So we do see some softening. We benchmark, kind of what's happening against sort of Oxford economics. I just saw an update this morning. Q3 is probably a bit of a delay in terms of the softening, and I think probably the lowest growth here in Canada is expected in Q3. Now, that does not take to impact Silicon Valley Bank failure and some of the associated downstream impacts of that, which I think we're just starting to see now 2 weeks post that event. So I think there's some risk there. Is there
a big impact? But really, is there a big impact? I mean, the government was pretty quick to throw money at it, the U.S. federal government. I mean, a lot of people, I read some stats, a disproportionate amount of their deposits were larger than $250,000, so they weren't covered. But then the government just stepped in and said, you're covered. And so we're a little off topic, but I think it goes to the state of the economy. Really, when SVB, gets into trouble, how much trouble is that really causing the economy to the average listener and you and me?
I think that's yet to be seen, Michael. I think we could say, deposit holders were whole, but shareholders are not protected. I think this dramatic rise in rates is a bit of a problem on the balance sheets of many corporations and banks in particular, right? So we've got a cost of capital problem where we're up kind of 4 or 5%. And what does that mean in the kind of medium term? And I think there will be some restructuring that will have to take place. Companies have gone under, right? So it's not just the depositors, they're whole, that's fine. People have lost their jobs, right? And I think there'll be some downstream impact of that, as there always will be. So we may see, despite, you can read one article, over the weekend that says maybe interest rates are going to start coming down, but then you can look at the fallout of SVB bank failure and prediction of actually rates going up. So I think that hasn't really been digested, so to speak, in the markets and the economy. And I do think there will be some domino effects, including here in Canada, right, where we have, there was SVB Canada, which is now in the arms of OSFI, our regulator. Absolutely. Yeah. Mostly in the technology sector, right? We have big banks that operate in the US that won't be, protected from any fallout there, et cetera. So my prediction is we haven't seen this whole thing unravel yet. And I do think there'll be some impact.
Yeah. Okay. Interesting. All right. Well, let's end with some advice. And you've been giving great advice. I'll interview, but let's hone this in a format I like, which is 2 starts and 1 stop. So for the retail or retail insiders listening to the podcast, 2 things they should start doing or thinking about. 1 thing they should think maybe differently about, and maybe around consumer debt or consumer spending, just so we kind of bring this home, make it as relevant as we can. Great wide-ranging discussion, but let's hone that in and 2 starts and 1 stop for the retailers listening.
Yeah, I mean, I think I think we talked a bit about cybersecurity. I think it's unfortunately on the rise, and the bad guys seem to be winning. So I think just really using good vendors, as we said, some of your listeners won't have the level of investment required for very sophisticated systems, but what they can do certainly is use really reputable vendors that have good technology to protect data. So I think that's super important. Being obviously creative and innovative and all that, but really protecting or using the forecasts, which I think are saying probably we're in for a softer economy. So obviously continuing to be optimistic, but also with some caution around additional financing and additional spending. So I would probably caution to watch that, I think would be my other piece of advice.
It's interesting because I think what I see in the data, and some of the data, is people spending less in retail, but booking flights and, getting back to normal, all that stuff they didn't do during the COVID era. This swing of consumption that I think can actually distract people from what's going on in the economy. In other words, retail is off. Okay, but we bought our brains out during the COVID era. We literally bought 4 a year and a half, and I don't need another TV. My TV works fine, so I'm going to Tahiti instead. Do you see that in your data too? I mean, is that part of your advice, is to kind of have that kind of holistic view of how consumers spend?
Yeah, I think we are seeing a lot of this accumulated disposable income is dropping. So all of those savings that parts of the economy and consumer segments had. So we didn't have to drive to work. We couldn't travel if we wanted to. We couldn't go to restaurants. So that accumulated disposable income is now probably almost back to pre-COVID levels, except for some of the very wealthy segments. So I think you're right. I think all the travel and spending is kind of the tail end of some of that accumulated income. I do think we're seeing in the numbers that is, as I say, closer to pre-COVID levels. So that will probably level off. And I think there'll be some pressures in terms of the economy softening. We have variable rate mortgages in Canada, which we talked to our US colleagues about. It's sort of an unusual product. And unfortunately, those that are renewing those this year are going to have this, what's increasingly being called a payment shock, where they're going to be renewing at rates that are kind of 4, 5, 6% higher. And that's real money for the average Canadian family.
Particularly, I think on the West Coast, I think the Lower Mainland, Vancouver, they kind of live in their money a little bit. I mean, the cost of housing is pretty high. Yeah, I mean, it's not widely distributed across the nation. Well, listen, it's been just a great, wide-ranging conversation. If people want to learn more, get in touch with you or find out more, dig deeper into some of these things, how do they get in touch?
Yeah, very happy to have folks visit our website. We have a lot of information, educational around what we do. We also have a lot of information for businesses. So welcome folks to take a look at Equifax.ca.
All right. Well, Stu, thanks so much for joining me on the Voice of Retail podcast. Great discussion. Thanks for making the time to do some chitting and chatting, and look forward to doing some more. And let's see, maybe we'll get you back on to see who's or what forecast comes true. Like, whose crystal balls are a little clearer than others. But thanks again for joining
Wonderful. Love to. Thanks so much, Michael. Appreciate it.
Thanks for tuning into this episode of The Voice of Retail. If you haven't already, be sure and follow on your favorite podcast platform so new episodes will land automatically each week. And be sure to check out my other retail industry media properties, Remarkable Retail Podcast with Steve Dennis, and the Global E-Commerce Leaders Podcast. Last but not least, if you're into barbecue, check out my YouTube barbecue show, Last Request Barbecue, with new episodes each and every week. I'm your host, Michael LeBlanc, consumer growth consultant, president of Emmy LeBlanc and Company Inc., Maven Media, and keynote speaker. If you're looking for more content or want to chat, follow me on LinkedIn or visit my website at meleblanc.co. Safe travels, everyone.